So last time we talked about the US stock market indexes. But what if I told you that stocks are only part of the equation? We'll take it a little bit further. We'll talk about debt instruments and what a bond is. And with that, we're going to talk about the Bloomberg Aggregate. The Bloomberg US Aggregate Bond Index, or just the Bloomberg Ag, is an index of US investment-grade fixed-rate bonds, including both government and corporate bonds. It is the benchmark for US investment-grade bonds and represent over 70% of the total bond market. The index primarily includes US Treasuries, government agency bonds, investment-grade corporate bonds, and securitized products. Securities must have at least $250 million in outstanding par value and at least 1 year to maturity. Think of bonds as lending money, a debt instrument. It's not equity ownership in a company. Moving on to overseas, we will start with the MSCI EAFE, which stands for Morgan Stanley Capital International for MSCI, and the EAFE stands for Europe, Australasia, and the Far East. This index is a free float adjusted market capitalization index that is designed to measure the equity market performance of developed markets, excluding the US and Canada. The MSCI EAFE index consists of the following developed country indices: Australia, Austria, Belgium, Denmark, Finland, France, Germany, Hong Kong, Ireland, Israel, Italy, Japan, the Netherlands, New Zealand, Norway, Portugal, Singapore, Spain, Sweden, Switzerland, and the UK. All right, that's a lot. Within these 21 countries, there are over 600 companies, and the top sectors include financials, industrials, and healthcare. Next, we have the MSCI EM. Now again, same Morgan Stanley Capital International, and the EM stands for Emerging Markets. The MSCI EM index is a free float adjusted market capitalization weighted index that is designed to measure the equity market performance of the emerging market countries of the Americas, Europe, Middle East, Africa, and Asia. The MSCI EM index consists of the following emerging market countries: Brazil, Chile, Colombia, Mexico, Peru, Czech Republic, Egypt, Greece, Hungary, Poland, Qatar, Russia, South Africa, Turkey, United Arab Emirates, China, India, Indonesia, Korea, Malaysia, the Philippines, Taiwan, and Thailand. All right, those are 24 countries. So this index captures large and mid-cap companies from these 24 countries with over 1,100 companies. The index is heavily weighted towards China, Taiwan, and South Korea, with high exposure to technology and financials. This index is for sure known for higher volatility. To note, both MSCI indexes trade in their local currencies, and then the MSCI converts these prices to US dollars to calculate the index performance for global investors. The MSCI will provide versions of other currencies, such as the euro or the Japanese yen, for regional benchmarks. More growth potential, but more uncertainty. We're going to move on to Japan, the Nikkei 225, also known as the Nikkei Index, out of Japan. This index, based on the Tokyo Stock Exchange, is a price-weighted index operating in Japanese yen, meaning it is not market capitalized. Instead, it is capitalized by the stock price of the stock. Since 2017, the index is calculated every 5 seconds. It tracks 225 highly capitalized and liquid companies from a wide array of sectors. The highest weighted sectors are IT, consumer discretionary, and industrials. All right, next we're going to go to Europe with the Euro Stoxx 600 and the Euro Stoxx 50. The Euro Stoxx 600 is an index that has 600 companies representing large, mid, and small cap companies from 17 European countries. This index is a free float market capitalization, which means shares are in the hands of public investors only and not governments, promoters, or company officers. The top 4 countries in the index are the UK, France, Switzerland, and Germany. The index is available in several currencies, and the top sectors are industrial goods and services, healthcare, and banks. The Euro Stoxx 50 gives investors exposure to 50 of Europe's leading blue chip companies across the Eurozone. It is a free float market capitalization. The 50 companies are considered super sector leaders in their industries in Europe. Lastly, we will finish up with the FTSE 100, the Financial Times Stock Exchange 100, which represents 100 of the UK's most highly capitalized blue chip companies listed on the London Stock Exchange. Top sectors include banks, healthcare, industrial goods and services, and energy. Ladies and gentlemen, there's a lot of information to unpack here. Again, all indices are unmanaged indexes and cannot be invested into directly. Unmanaged index returns do not reflect fees, expenses, or sales charges. Index performance is not indicative of the performance of any investment. And always remember, past performance is no guarantee of future results. Again, thank you for your time. Ciao. We will see you at the next video. Bye-bye, everybody. Bye-bye.